Hello, welcome everyone to our interview session today. My name is Thomas Schmidt. I'm Associate Professor in Finance at HKU. And this interview is sponsored by the HKU Jockey Club ESG Institute. To have Jean-Marie to talk about sustainability and investment topics. So, if I may start, let me first ask you about your company, SYNCICAP. So this was founded during the pandemic in Hong Kong. So can you share a little bit the rationale behind this decision to found this company and also how your journey was since then?
SYNCICAP was founded in 2021. We are a subsidiary of two big asset managers in Europe, OFI Invest AM in Paris and Degroof Petercam Asset Management in Belgium, in Brussels. Our two parent companies are involved in ESG way of managing money for more than 20 years. We are kind of a pioneer in that field in Europe. And we decided to come to Asia because we have two objectives. The first one is to improve our capabilities because we are managing Chinese equities, Asian equities, and emerging equities, emerging bonds for more than 10 years, based in Europe. But we were thinking if we want to be credible, if we want to improve our research capabilities, we need to be in Asia because we have to be close to the companies, corporations, and all the trends that are happening in Asia because Asia is one of the major engines for growth in the world. And the second objective was to propose to professional investors in Asia the expertise of our two parents company because we have very long and solid track records on ESG way of managing money on both listed and unlisted assets. So that were the two main objectives. We decided to set up in Hong Kong because Hong Kong is in the heart of Asia, in the equidistance from Japan to Singapore, and also very close to mainland China because we invest in mainland China. And we think also there is a huge potential for Chinese investors to diversify internationally because so far the level of international diversification for Chinese investors is very low. So we decided to set up in Hong Kong. The timing was not very good because, of course, it was COVID time and it was very difficult to meet people during the first year we were there. And also, it was a difficult time for Chinese equity market. Maybe you can remember 2021, a kind of new regulations in China, and then the China equity market went down significantly between 21 and 24 before recovering a bit. But we did quite well in relative terms. And last year we have got an award given to us by the China Fund newspaper, very famous on the asset management industry. We were the first in Chinese equity performance, so quite happy. And also we finally met some potential investors, so we are promising possibilities in the coming years, I hope. And I have to admit also, Hong Kong is a very nice place to live and very, very convenient. Facilities are amazing, especially airport, were very easy to go everywhere in Asia. So these are the main reasons we are here.
I understand, great. So as you mentioned, the company was founded as a joint venture. So how does the company kind of integrate the expertise and the knowledge of both these partners, and how can we think about the process if this company is founded as a joint venture?
Yeah, it's very important because our two shareholders, they have one thing in common. They believe strongly in research-driven way of finding performance, and also they strongly believe in ESG and sustainability and responsible finance. This is very important. So that means they have been involved in that field for more than 20 years, kind of pioneers in Europe. That means big teams, In France, we have a team of almost 20 people only dedicated to ESG research. So it's quite a significant investment. And also in Brussels, they have a big team of more than 10 people. When we arrived in Hong Kong, we hired portfolio managers. We have been hiring also analysts. And we sent our analysts to Europe to learn about non-financial criteria, how to analyze companies. So that is very important to us because we want to import the good practices from Europe to our portfolio manager here based in Asia, managing Asian equities and emerging bonds. Very important. In Europe, our track record is very good. Sometimes we have been asking why investing in a sustainable way, can it damage performance? And we answer that in Europe, our track records are very good. And I can also add that when you use ESG, especially in terms of corporate governance analysis, you avoid many risks and you avoid reputational risk also.
So if I can follow up on that, do you think that the principles that you use in Europe can also be applied to Asia, or is it like you need to adjust them, or what do you think about that?
We can apply. The main difference is about data, because when you want to analyze, you need data. In Europe, ESG data are well developed. It's not completely the case in Asia. Sustainability score, sometimes you need to find data and you need to find new companies investing in data research. So it's not completely as well developed in Asia that it is in Europe.
So do you see any advances in that area? So are there new data providers coming?
Yeah, because well, we have seen in Europe during the last 15 years a huge transformation in the data providers, because I know in France at the beginning the main data provider were French, and then when the industry developed, you need to invest more and more. And then at the end of the game, big data providers, they bought all these small data analysts, and then MSCI is the leader. American, we are not the first in that field, but now American people, they buy everything. In China, MSCI is not so well developed, but you have new data provider, Chinese data ones, that are emerging. So we are following them. Maybe it's a little bit early stage, but we see improvement and a true will to improve in that field. Okay. And also I can tell in Hong Kong, the regulator induced us to develop in the way we manage sustainable finance.
I see. So talking about Hong Kong, so you mentioned already kind of the reasons why you came to Hong Kong, but can you maybe elaborate a little bit on how you see Hong Kong as a hub for sustainable finance, and what role Hong Kong can play in the future to even promote sustainable finance more than it is doing today?
Yeah, I explained why Hong Kong is interesting, because the location is interesting, but also history of Hong Kong is a connector between West and East, of course, and most importantly, China. And for our shareholders, setting up in Hong Kong is very important because there is a common law. Common law you can trust. It's reliable, jurisdiction is reliable, so this is very important for us, for our investors in Europe, and also the regulator SFC in Hong Kong want to push towards ESG. So this is also very important for us, and SFC is a very reliable regulator. So for us and for our investors and shareholders in Europe, it's very important to be in a place you can trust.
I see. And you just mentioned that the Hong Kong regulator is pushing for sustainability. So we at the moment realize that there is a different trend in the US where the regulator is becoming more lax on sustainability, and a lot of changes are happening. So what is your opinion on this sentiment in the US that is turning a bit negative towards sustainability? Is that already kind of having spillover effects on Asia and Europe, or do you see this as more isolated event that will only affect the US?
I think it's like every trend. You have the first move, the first wave, and then you have kind of consolidation, people questions about is it the right way to do it? Because even in Europe, when the regulator decided around 10 years ago to implement a law about carbon emission and that kind of thing. So when it becomes mandatory, sometimes you have so many constraints, and at the end of the game, it can be difficult because you need to invest a lot in research, in new analysts. So the first wave, maybe we are at the end of the first wave because everybody did analysis in own way, and sometimes we lack a kind of homogeneity between the different analysts you can find in one asset manager company, different from another. So some asset management, you are allowed to buy this company, the other one you are not allowed. So we are maybe at the end of the first wave, and coming from America, you have that kind of questions about is it useful to go to green? But yeah, the big trend is still there. To my mind, of course, US, you have people invested in the oil industry, but also I can tell that US is one of the biggest countries in the world investing in green energy, because the new Inflation Act, the Reduction Inflation Act in the US decided 5 years ago. The new administration didn't decide to change anything. So I think US economy is going green, and the trend is there to stay. Nobody wants to go back, and I think we only have one planet, and everybody is ready to understand that we need to go greener for the longer term.
That's a very good point. Yeah. So. In your experience from investing, so what do you think is the impact that sustainable investing can have on firms? So has it the ability to really change firms? And do you think what is the better approach? I mean, there is one idea to kind of exclusion, so you just avoid those very bad firms and you cut them off from capital supply in a sense, or engagement, so that you try to engage with those firms. So what is your experience?
We are doing all of this. Some companies we avoid completely, of course, but some other companies it's very difficult to have a kind of huge definitive judgment. Because take example, Total Energy, French company. Okay, it's involved in the oil industry, but on the other hand, all these big oil companies, they don't want to disappear. And we know that in maybe 20, 30 years, nobody will use fuel anymore. So these companies are investing a lot also in green energies. And we need capital to invest in green energy because governments are already too much debt. So we need private sector to invest in green energy. And also in terms of governance, it's very important that the investment flows go to virtuous companies. So we have the power as an asset management company to target the investment, the money in virtuous company. So this is very important. It's all the industry is doing the same. So everybody is going in the right direction. So it's very important. So at the beginning, the regulator induced us to do it, but now the trend is already gone. It started, and we have a big power to invest in the virtuous companies. So asset management industry is very useful in that field.
I agree. So I mean, you mentioned the energy transition. I mean, many people say that the energy transition is probably our best chance to really reduce greenhouse gas emissions dramatically in the next decades to come. So from your experience in investing in those firms that engage in the energy transition, so what do you think are still the key obstacles for those firms, and what could the regulators or how could the environment change to even faster and make this transition faster and more successful?
The most important things right now is to find a good balance between regulator that wants industry to go greener and greener as fast as possible, and also corporations, they need to be profitable. They need to hire people. Let's take example Germany or Germany car manufacturer. If we go too fast on electricity, so what do you do with your factories in Germany? You close everything. So socially, is not a good idea. So you have to find a good balance between the direction, we know the direction, and the rhythm you do it, the pace of doing it. So this is why sometimes you can find investors or people not happy with going too green too fast, because it's about social issue, and also you need to invest a lot. It's capital intensive to change completely an economy. So you will have up and down waves, you will have controversies, but I think the trend is clear.
Jean-Marie, let me ask you, so when you do sustainable investing, so what is your strategy? How do you actually do that?
Well, sustainable investment, you have many fields you can address. You can do best in class, so that means you keep sector neutrality towards benchmark, but in each sector you invest in the more virtuous companies according to your own way of assessing the management, the carbon footprint, and that kind of thing. So this is the first thing. And most of the time, best-in-class funds, you can find it's a kind of close to the benchmark, low tracking funds compared to maybe European equities, that kind of thing. You can also invest in specific thematic funds. We have funds in our company dedicated to biodiversity. So you need in that field to have analysts that define their own scoreboard, how to calculate biodiversity. You have also clients that ask us, they want to calculate a kind of temperature of the portfolio. So can you imagine, you can now do that, you can imagine the temperature trajectory of your portfolio in the coming years to be in line with the Paris Agreement objectives. So you can do many things. The most important is that you need databases, as I said. You need also analysts, because if you want to calculate the biodiversity impact, you need analysts to specifically know how to calculate that. And also you need good relationships with your clients, because you can adapt to your client will. We have some clients that they don't want anything to be involved in nuclear power. So you can discuss about nuclear. Nuclear is not carbon emission company. So you need to adapt to your clients. You need to have many analysts and a lot of databases. So it's quite complex, but you need to invest a lot to provide the best service in ESG.
So speaking about your clients, so what do you see as the recent trends in their investment desire in sustainability? So you mentioned biodiversity, which is a hot topic, of course, climate and energy transition, maybe also like more social topics, like diversity. Yeah. So what do you see are the big trends at the moment that clients want?
The big trends we see is about impact investing, because now we want clients, they want to really explain to their shareholders and to their board that they have real impact on the economy. So how to calculate the impact. It can be impact in terms of how much emission for 1 million invested. It can be also impact on social, because we have also some clients that don't want to invest in companies that with layoff plans. So yeah, the major trend we see recently is impact, and also what is difficult for us because we have many clients, and each client has his own wish in terms of impact. So, but we need to adapt. This is competition.
So data becomes more and more important to measure impact.
Data is really the key. So you have big data from big data providers all over the world, like MSCI, the most famous one. But also you need to invest in your own team, because you have more and more clients. They want their own impact calculation. So it's quite costly. But if you don't do that, you have the risk that the clients go to another company. So you need to do it.
So making things measurable and avoiding being accused of just like greenwashing and those kind of things seems to be like a big topic at the moment.
Yeah, you know, recently what happened with some big asset management company, especially in your country, they were accused of greenwashing. So the regulators now are very careful about that. Nobody wants greenwashing anymore. That's why you need to invest more and more in data. You need to invest more and more in qualitative analysts, and also, you know, everybody wants his own tailor-made portfolio and impact measures. So you need to invest in high-quality analyst people.
So it's kind of also what you mentioned before, like the different waves of sustainable investment. So this could be like the next wave, that everything becomes measurable and on a different level. In the first wave, measurability was not key, but now measurability becomes this very important outcome.
That's right. This is a new trend coming, and we see it, but it's very difficult. But if you don't do it, you will not be successful in asset management industry.
I see. That's very interesting. So there, like in at least in academic research, there is always this discussion how financial performance and sustainable performance, how they interact. So from your experience in investing, would you think that like investing in sustainable forms gives up financial performance, or do they both complement each other and you can achieve superior financial performance and sustainable performance at the same time?
First of all, I have to say that it is very difficult when you calculate performance to differentiate between what is non-financial analysis and what is financial analysis, because you have so many academic research on that. I think nobody finds the same results, because if you try to analyze sometimes ESG funds compared to the other fund, you have cycles in the markets. So most of the ESG funds, they are not invested a lot in carbon intensity industries. Sometimes it's good, but sometimes it's not good. Sometimes oil companies, they are the best performers in the stock market. So it depends. For us, it's not very important. What we want to do and what we want to provide to our clients is a good mix of financial performance and our track record. When you see our track record compared to all the market, performance is very good. So a good mix between financial performance and also non-financial measurable score. So it's a mix. And at the end of the game, your clients stay with you or not. So this is the most tangible way to measure success.
I see. Thank you. So let me ask you some more, I would say, probably personal questions. So you had a long career in finance and in sustainable investing. So do you have any advice that you could give to young professionals, HKU graduates or students who want to build a career in finance, sustainability, or the intersection of finance and sustainability?
Yeah, when I started my career, so it was quite a long time ago because I started in 1987. At that time, nobody cares about giving a meaning. And when you were involved in finance industry or you were already, you are like a trader, you know, at that time, you remember the movie Wall Street, so you are a kind of ugly people. And that's why finance industry at that time was not very popular among younger generation, but it changed completely. Now you can give a kind of meanings when you are working in finance because you have the power to invest in the virtuous sectors of the economy. So this is very important. This is something that has changed completely during the last 15 years. And at the beginning, it was because of after COP21 Paris Agreement, then the French regulator decided to implement a new regulation. But now we can see more and more younger people coming to us because they want to be involved in green industries and in virtuous way of investing. So it has completely changed. The mindset has completely changed with younger generation when I started almost 40 years ago and now.
I see. So, like looking forward a little bit, how do you see the industry changing, and what should like people who want to enter this industry be prepared for? I mean, do you think that like there will be dramatic changes also in the skill sets that people need? Because I guess that also changed quite a lot over the past decades.
It has completely, the essence of the job has not changed. Our job is to find the best performance, to manage, to try to target the best performance for our client in accordance with the objective investment guidelines, the regulations, of course, and everything. So, and also you need to be a good communicator and to have a good communication with your clients so that there is no misunderstanding of what you are doing in terms of strategy. So this part of the job hasn't changed. It's still the same compared to when I started 40 years ago. But for the rest, everything has changed. When I started my career, Excel didn't exist. So you need to calculate by yourself all the efficient frontier or that kind of thing you need to do by yourself. Now, at the beginning, you struggle to find information. I remember in Paris at that time, if you wanted to buy Wall Street Journal or Barron's, the Barron's is a very famous financial newspaper in US. You need to go at a certain time and to another, take your car. So it's completely different. Nowadays, the major problem is you have to cope with too many information, and you have to keep in mind how to deal with all this kind of information. And now you have all kind of tools, AI, algorithms, softwares of everything. So this part of the job has completely changed to some extent that one day maybe you can be replaced by a AI analyst or robots, or you don't know. So you need to take care about that. You have to think how to use these new tools that can do so many things. So first of all, what has changed also in our industry is competition. Now you have ETF competitions, you have so many competitors coming in this market, and you can invest on everything at every time. You know, you can have also blockchain industry, so if you want, you can buy funds in a second, you can transfer money in a second. You can, if you want to buy, I don't know, a small subsector of the S&P 500, you can do it. When I started my career, you cannot do it. So competition is very, very huge, and competition pushes prices and margin lower, of course. And yeah, these are the main changes. But it's still very interesting because economic is maybe the only science that nobody really know how to, and also you have to think that our industry is a human industry, it's psychological also. Psychology is very important. So that's why it's also very interesting.
So given all these changes also in the industry, What would you think is the ideal candidate who applies to your firm? I mean, if you think about a fresh graduate from HKU, what are the qualifications and the experiences in terms of internships or in terms of the choice of the subjects that the person studied? What are you looking for?
It's a very good question, because what we want to, of course, we need solid background, solid financial background. We are in the finance industry, so first of all, you need, but moreover, we don't want people too ideologic, because we have the experience. I have hiring people so many times in my life. If you come with the ideology way, it's not good. You need to be pragmatic, agnostic, and you need to be concentrate on reality, not in your dreams and in your own ideology. So you need a solid background on finance, and you need to be pragmatic, agnostic about your own personal views, and to adapt to the client objectives, or adapt to the market needs. That's all.
So open-minded and able to adapt to changing trends are key qualifications you're looking for. Yeah. Okay. Thank you very much. Thank you very much for taking the time to share your knowledge and experience with us today. So Jean-Marie, thank you very much.
Thank you very much.